Hi, today we're gonna cover market risk, other areas like stress testing and limit management. Stress testing involves construction of extreme market condition scenarios and verify whether firm or business can sustain in those scenarios market condition. It helps firm to assess their potential weak areas, loss concentration, and their risk positions. It's conducted by the firm on regular basis or sometimes on ad hoc basis as part of their risk management process. Actual event scenarios are actually scenarios which happened in past like dot-com bubble and housing market crisis in 2007 2008. So those are a few actual scenarios. Hypothetical scenarios, firm or regulators they come up with. Stylized scenarios like C-car, which is uh, different regulators in US and in other areas like UK, they come up with capital control scenarios. So it's a type, C-car is a type of stylized scenarios. It's a multi-factor scenarios common in finance industry. It's a simulated movement in interest rate, exchange rate, stock prices, commodity prices, which are common in finance industry. Uh, Scenarios, stressing models are as follows. One is factor push models. Analysts push some factors to the extreme values to assess the impact on the portfolio. Maximum loss scenarios is a mathematical approach where the worst combination of factor is tested to find out the maximum loss in the portfolio. Worst case scenarios, all factors are pushed to their extreme values. Other example is limit management. To control risk exposure of the firm, limits are placed at various levels like budgets, exposure, products, or business unit levels. A few examples are like performance stopouts, the maximum amount that a portfolio can lose in a period, so limits are placed on that. Working capital allocation limits are placed on the working capital amount allocated to department. Var value at risk limits are placed. How much value at risk losses can a department or a business unit can sustain. Risk factor limits like certain exposure to certain risk factors is avoided or taken in a limited amount. Position concentration limits like certain amount of position can be held. Leverage limit, the maximum amount of leverage in the portfolio may be specified, or liquidity limits.